Hi, this is Noah Brazil. I'm an associate attorney with the Buchanan Disability Team, and today we're going to be answering some frequently asked questions. I've got Hudson Ellis with me, a partner with our firm, and he is going to tell us what the difference is between group long-term disability insurance and private individual disability insurance.
Group disability and private individual disability benefits or policies are actually relatively similar in a lot of ways. Some of the key things that are different though are that a private disability policy, you can go out there and actually pick the terms yourself. There's a lot of different options, a lot of different features that you can go out because you want those in your policy. A group policy is going to be just something that you go and you're employed by an employer or a group or you're somehow associated with a number of people and you are covered by the group's disability policy. And so you get whatever is available to that group. There's some other issues as far as what law applies to the policy. We'll get into that in a different video. But as far as the actual policy, the main difference is that you can actually go and pick out which features you want. Some of the interesting features that you can get that are different are that a group policy is almost always going to be based on a percentage of your income. On the other hand, the individual policy is something where you're going to ask for often, and really most of the time, you're going to be asking for a very specific amount of insurance. So you might go and get a policy that pays for $2,000 a month, $10,000 a month, $30,000 a month, but it's a specific number as opposed to 60% of what you were making before you became disabled, which is kind of typical for a group policy. Some other features that you might have in a group policy, but you probably won't have in an individual policy, are things like having offsets, having things that will reduce the benefit that you get. You might start at 60% of the benefit, but after accounting for, say, Social Security disability benefits that you might apply for and be awarded, or having workers' compensation benefits, or any other things that might reduce that benefit, you might end up for far less than 60% actually being paid by the insurance company. Most individual policies for that set amount are not going to offset for other benefits like Social Security, workers' compensation, personal injury, or anything else like that. It's going to be very clean. You get the benefit that you paid for, and that's that. And there's other differences as well. And of course, what you really want to do is, once you become disabled, if you become disabled, you're going to want to look at the policy that's in force. And so whether it's a group policy or an individual policy, you're going to want to read through that. You probably are also going to want to have somebody else who's more familiar with those policies look through there to be able to advise you on what specific features the policy that you have comes with.